بسم الله الرحمن الرحيم والصلاة والسلام على رسول الكريم. السلام عليكم ورحمة الله تعالى وبركاته, and welcome to Takaful online course. And today we have a discussions on specific case. We can call it the case of selling bird or selling of a bird. And this through this case we will understand the differences between the Takaful business model and the insurance business model. Of course, we have highlighted previously in the series of episode the main differences between Takaful and insurance. And today we'll carry on the cases. In the future, we'll also discuss the different business model and also the underlying Sharia contract. So through this illustration, we try to understand more through a case what is the difference between Takaful and insurance. So let's start by giving the example of the case whereby you have two parties want to close a deal for a bird with the price of 1,000. So the bird is in the cage. So that's basically the fact of the case. The seller is the owner of the bird and the bird is in the cage. And the price is being determined with 1,000. So what's the status of these transactions? Is the transactions valid or not? So what your answer will be? Definitely your answer will be that these transactions is a Sharia compliance. Why? Because all the pillars of the contract have been fulfilled. We have the two contracting parties, which is the buyer and the seller. And we have the offer and acceptance through the communication, selling and buying. And we have the price and the bird and the goods. So the goods is the a bird in our case, and the price is 1,000. So it is a Sharia compliance. Now let's give a second case whereby it is the same scenario, the same fact, the only few things has changed, or maybe precisely one only thing that has changed. So we read the fact of the case. The seller is the owner of the bird. It is the same. But here the bird is outside the cage. So meaning that a seller is selling a bird with 1,000 and the bird is outside of the cage. So what's your assessment on the Sharia compliance status of this case? Is it Sharia compliance or it is not? So definitely your answer will be it is not Sharia compliance. And your reason will be is that the sellers will not be able to deliver the bird. So here it's a lack of delivery. Meaning the owner of the bird will not be able to fulfill the delivery. Why? Because he lost the bird. The bird is in the sky, the bird is on the tree, and the bird is not trained. Of course, the assumption is that the bird is not trained to go back to the cage, is not trained to go back to its owner. That's the assumption. So if the bird is out of the cage, definitely it will go and fly far, far away. And as a result of that, he will not be able to deliver. So that's the result of the Sharia compliance, and that's the assumption of the case. Now let's give the third case whereby the facts are the same, or the scenario of the transaction is the same with the additional adjustment. So the fact of the case will be the seller is the owner of the bird. It is the same. But here the bird is outside of the cage, but here the price has been discounted. Meaning instead of 1,000, it is 500. And why this one 500? Because of the risk premium. Because you may not be able to capture the bird, or whether you will catch it or not, whether you deliver or not. So what you will do, you give a kind of discount. So you are selling a bird outside of the cage with a discount amount of 500. So what's your assessment on this scenario? So definitely your answer will be it is not Sharia compliance, and it is similar to the previous case despite the discount. Meaning whether you provide this discount or not, it doesn't change the structures and the status of the Sharia compliance, whereby you will be compromising on one of the requirements of the subject matter, which is the delivery, meaning the delivery of the goods to the buyer, in our case the delivery of the bird to the purchaser. Now, my questions to you now, what is the solutions? How to look at the case in such a way to make it more Sharia compliance, how to shift the structure, how to adjust the business model, how to recalibrate whatever aspects in the case and make it Sharia compliance. And you are still want to sell the bird with the 1,000 and the bird is outside the cage. So what you will do, how to make it Sharia compliant? If you still do it, it will be not Sharia compliant because you will compromise on the requirement of the delivery. So what you will have here, we have few options. I mean, among the options that you may suggest and that you may think about is basically putting the sales transactions a little bit aside, put it on hold, then you will engage in what's so-called the ju'ala. Ju'ala is a kind of commissions. Ju'ala is a kind of an open promise by the one party to pay whoever perform a particular task. It is a kind of reward, it's a kind of prize, it's a kind of amount given, binding on the promisor, not binding on the promisee. And the person who will perform this task, he will be awarded, he will be enjoying getting this prize or this amount. And it is a unilateral contract, which is binding on the initiator only, not on the other party. And a ju'ala is a contract basically in which the first party, who is the ja'il, or the ja'il, who offers basically a specific compensations or specific amount or specific gift or specific award to the, we call it al-ju'l, this amount, this prize, we call it al-ju'l, to anyone who is amil in the context of ju'ala, who will achieve a determined result in unknown or known period. So as you can see, there is a kind of ambiguity in the ju'ala, but yet it is permissible. And you say why? Because it is a unilateral contract. It is an initiated task or a transactions to be binding on the initiator, on the promisor, but not on the promisee, not on the amil. So there is a kind of ambiguity, but yes, it is allowed because it doesn't fall under the exchange contract, it doesn't fall under the muawadat contract. So what we have here, we have the ju'ala, and as a result of that, the case will be shifted into the following stages. Number one, you conclude a contract of ju'ala to catch the bird. Now here you could contract with the same purchaser, meaning the future person or the person who is in the future will purchase the bird. But in this scenario, you are contracting with the person in a capacity or in the context of ju'ala. Has nothing to do with the sales yet. So we are talking about ju'ala. It could be the same person. And if the person or the purchaser, the future client has no skills to catch the bird, so we'll go to an expert, meaning a third party who will perform the task and catch the bird. So you have the options, either with the same person if he has the skills, or third party. Number two, the exercise of catching the bird, meaning the executions of ju'ala. And as you know, there are different techniques and skills how to catch the bird. So basically these guys will be going after that bird to catch it. Upon catching that bird and secure the possession, and al-qabd, so it will be delivered back to the owner who initiated the ju'ala contract, and he will pay him the ju'ala. And in case, let's assume the ju'ala is 500. So you will give him 500. Either you give him a cash 500, or it will be one of your liability that you should pay him because he give you the bird. You're supposed to pay him back the 500. either on the spot or later on, but that's the arrangement. Now, as a result of this, the bird has been secured. So the purchaser catch the bird, and we move to the next level of the transactions. With that, thank you very much, and we shall carry on in the coming sessions. بإذن الله والسلام عليكم ورحمة الله تعالى وبركاته.